Financial management. So, today's topic is financial management, meaning of business finance. Money required for carrying out business activities is called business finance. Finance is required at every stages in the life of a business entity. Adequate finances are must for successful survival and growth of a business. A business needs finance to establish the organization, to run the day-to-day operations of business, that is salaries, purchasing of goods, business expenses, etc. To modernize, expand or diversify business, to purchase tangible or intangible assets. Financial management. Business requires business for finance for various short-term and long-term business activities. To meet the varied financial needs, business enterprises use different sources of finance. Each source of business has a cost. Therefore, it is imperative for a business enterprise to evaluate the various sources available so that finance is raised at a minimum cost and risk. The success of a business enterprise largely depends on the quality of its financial management. Financial management is concerned with management of flow of funds and involves decisions related to procurement of funds, investment of funds in the long term and short term assets, and distribution of earnings to the owners. Few other definitions of financial management. Financial management is the operational activity of a business that is responsible for obtaining and effectively utilizing the funds necessary for efficient operations. Financial management involves the application of general management principles to a particular financial operations. Financial management is concerned with optimal procurement as well as usage of finance. Optimal procurement of finance means identifying and comparing the various sources of finance in terms of cost and associated risk. Optimal usage means investing the procured finance in such a manner that the returns from investments exceed the cost of procurement. Financial management aims at reducing the procurement cost of funds, keeping the risk under control, achieving effective deployment of such funds, ensuring availability of sufficient funds, and avoiding ideal finance. Role of financial management. As discussed earlier, the success of every business enterprise depends on its financial health. The financial management decisions directly or indirectly affect the financial position and financial health of a business. The effectiveness of financial planning is indicated through the financial statement like balance sheet and the income statement of business enterprise. Let's discuss few prominent examples of the aspects gets affected by the financial decision. The size and composition of fixed assets of the business, the quantum of current assets as well as its breakup into cash, inventory and receivables, the amount of long-term and short-term financing to be used, breakup long-term financing into debt, equity, etc. All items in the profit and loss account. For example, huge investments in fixed assets means higher amount of depreciation on large amount of funds raised through debts will result in high interest amount in the profit and loss account. And if we are seeing the aspects, the size and the composition of fixed assets of the business, the size and the composition of business assets depends on the financial decision of a business enterprise. Over investment in fixed assets may block funds and increase the size of the fixed assets, which may not be healthy for business. On the other hand, too little investment may hamper the growth of the business. The quantum of current assets as well as its breakup into cash, investment and receivable. The financial decisions about investment in fixed assets, the credit policy, inventory management, etc. influence the amount of working capital required by a business enterprise. the amount of long term and short term financing to be used. The financial management takes decision about the proportion of funds raised through long term and short term resources.